Welcome to another 21 Hats Dashboard. I'm Loren Feldman, and today my guest is Ami Kassar, who is founder and CEO of Multifunding. Ami's an all-around expert on small business finance who has been a guest here before. Welcome back, Ami.
Loren, always a pleasure to be with you, my friend.
Always a pleasure to have you here. You've been a guest here a number of times, but this is the first time you've been here since you decided to move your column from Inc. magazine to 21 Hats. I'm assuming you did that because of the big bucks I'm paying you?
Oh, yeah. I was just those, your monthly checks are just out of control, and I just couldn't resist it.
Understood. Who could? I don't want to go too deep into the policies of another publication, but I would like to point out your move is related to a topic that I know you care deeply about, which is the occasionally sketchy tactics of fast cash alternative lenders who can get money to a business really quickly, but can leave it in a very difficult spot. Can you tell us a little bit about that?
Yeah, Loren. So, as you know, and I think many of your listeners know, I don't like lenders who offer fast cash and money in your bank in 24 to 48 hours. And something that sounds too good to be true, and it does. It is. And then more often than not, puts businesses in a debt trap. We see it time and time again in our work, where we see business owners come to us and they're stuck on this expensive debt that has to be paid off pretty quickly, and it's killing their cash flow. So they got themselves in a pinch, and things are tough, and they went online and they saw some offer, an enticing offer. We'll have the money in your account in 24 to 48 hours, and they grabbed it. And then the dominoes started to fall.
How does this relate to Inc. magazine and your move?
The issue with Inc. was that they came out with their preferred partners list, a list of companies that they say small businesses can't live without. And in that preferred partners list, they included a handful of these lenders. And that, to me, is completely unacceptable. If we are going to be working, as I do and you do, in order to provide tools and resources and information and help to small businesses and entrepreneurs, decisions like Inc. made and other big publications and other big companies make as well are simply unacceptable to me.
Well, we're happy to have you here at 21 Hats, Ami. Let's move on. You mentioned something on your blog recently that was news to me, and I suspect to others as well, which is that under certain circumstances, the SBA will lend a business money with 0% down. Do I have that right?
Yeah, it's a little trick. It's a little caveat trick, but if you are in a business, say you're, to keep it simple, in the dog food business, and then you want to go acquire another business, and the business you're acquiring is exactly in the same industry as you are. And it's like a dog food manufacturer 1 and dog food manufacturer 2 coming together. You can, in fact, try to get a loan for that second acquisition with 0% down. Now, if you're the dog food company and you're buying a cat food company, that wouldn't count. But if it's essentially
really,
it has to be an identical industry.
And being both in the pet food isn't identical enough.
Well, that might be a slight extreme, but I don't think so. It has to be in the same industry in order for it to work.
Wow. And so but the catch is you have to be acquiring another business. That's the only purpose.
Correct. If you're buying your first business, you have to have the down payment, and I think that's appropriate.
What's the SBA thinking on this? Do you know why are they encouraging this?
Well, I don't know if they're encouraging it. It's kind of a little secret rule that's been there for a long time. And it's just that they see it as a business extension or expansion rather than acquiring a brand new business. So if you were to go get an SBA loan for growth capital, say a $350,000 loan to hire a bunch of people or to buy some equipment, and you have an existing business, you could get that loan with 0% down.
I see.
Because it's considered expansion capital. And that is the same vein that they think about these business acquisitions, as long as they're in the same industry as you're in today. And that story makes sense.
Am I right? Do you find that a lot of business owners are unaware that this is an option?
Oh, 100%. Now, that doesn't mean that you should just run to do that acquisition because it's 0% down. The acquisition has to make sense. The company you're buying has to make sense. The company has to appraise for the purchase price. You're still going to be on the hook for the debt. You have to cash flow the payments. That's harder these days because interest rates are higher. And these are all the kinds of choices that have to be considered. So I would not encourage someone to run into an acquisition just because it's 0% down. There's more to the puzzle than just that.
Got it. All right, next topic. You wrote a column for 21 Hats about, it was kind of a warning to business owners that they need to pay attention to their EIDL loans or they can get in trouble. I think you raised two issues. One is you better have used the money for approved purposes. And the other is keep in mind that this loan can get in the way if you subsequently need to borrow more money. Do I have that right?
Yeah, so I think we have to put the EIDL program into context, and it's going to be a problem for a long time. So let's look at the historical intent of the program. Historically, the EIDL is there if a hurricane or a tornado literally blows a business off the face of the earth. And the program is designed to give that business or entrepreneur long-term, cheap capital to recover from the crisis. COVID came and the government had no idea what to do. EIDL was never intended to be a program that was used on a national scale for a national crisis. And $390 billion was released in loans up to $2 million. And the truth of the matter is that people got it for very different reasons. There were legitimately some businesses, a percentage of those businesses, that were completely decimated by COVID. And they should have gotten that money. And hopefully they are on their road to recovery now and they'll have time to pay it back. There were plenty of businesses who got that money who didn't need it at all. And there were other businesses who got that money who were in deep trouble before COVID, and this was another lifeline for them, for their business. And so now the government has $390 billion of these loans out and a big mix of borrowers. Here's what people need to realize and understand about the EIDL program. First of all, this is an IOU to the U.S. government. You owe them the money. You lent them the money. It's like borrowing money from the bank. It's the U.S. government. You owe them your taxes. Take this money, you owe it to them. Secondly, they have a lien on your business. So if it comes time to borrow money again, and the new lender is going to want to lien in front of the U.S. government, the U.S. government or the SBA is going to have to allow that. And this is what it means. If you're going to need to borrow money again, the lender is going to ask you, what did you do with your idle money? Did you use it for permissible purposes? And if you didn't, you have a character problem that you're going to have to get to the lender with. Assuming you can do that, the lender is then going to have to go to the government, to the SBA, and ask them to subordinate their lien to their new lien. And while the SBA does not have clear guidelines when they're not doing that right now, they will build them, and that could get tricky also. So my best advice to people is if you got an idle loan, pay attention. Document what you used the money for. Have a clear use case. Be prepared to back yourself up if you need to. And if you took the money and it's still sitting there and you just haven't used it and you're using it, kind of saving it for a rainy day fund, remember that interest is accruing and continues to accrue. And maybe it makes sense just to pay it off and be done with it.
Ami, what do you do if you're not confident that you used the loan money appropriately? Is there some way to fix that?
You might want to talk to your bookkeeper or your accountant about that, or your attorney, so that you can come up with the best possible story. And if you didn't, you didn't.
If you didn't, could you just pay it all back? Would all things be forgiven?
If you've got the money. But Loren, I've met people who've bought jets with this money. I've met people who've invested in crypto with this money. I've met people who've had people call in who've paid off their divorce settlements with this money. A lot of this money was used for crazy stuff, and that's going to create problems for people.
Got it. What is the current lending climate like? Are business owners trying to get loans right now, and are they getting them?
Yeah, we're having no problem getting loans through. We haven't seen banks tightening. The interesting question that businesses have to consider is, do they borrow money at higher rates today? And sometimes the higher rates are giving people pause, which is understandable.
Of course.
My advice about that is it's all about the business case. So I always tell people, don't borrow money without a plan and without a strong thesis that you'll be able to pay the loan back, and understanding what bad could happen if your plan doesn't work out. Those same principles hold true if the interest rate is 6% or 10%. It just means that at 10%, the plan's got to be even better and stronger. So it was interesting. I was on a call with an old friend this week who is in a particular business, and a competitor is coming up for sale that had been trying to buy for 10 years. And the owner is finally ready to retire. And it's about call it $1 million transaction. And if he doesn't buy it now, he's going to lose it, because this guy's going to sell it to somebody else. The guy's ready to retire. So his interest expenses on this loan are going to be about another $40,000 a year versus the low of the market. And probably he should still do it, because the rates will eventually go down. So yes, it's a little bit more expensive. Maybe he can get the price of the acquisition knocked down because of his higher borrowing costs, but it's not enough of a reason, in my opinion, for him not to do the transaction, because these higher rates won't last forever.
All right, two more quick questions.
Sure.
I did an end of the year 21 Hats morning report in which I highlighted what I thought were the best small business stories of 2022. And you wrote two of them, both as it happens for Inc. magazine. One of them, you said a line of credit should be part of the furniture, I think is the phrase you used. Why do you say that? And when's the best time to get a line of credit, and how much should someone try to get?
So let's unpack that a little bit. So a line of credit used wisely is like an insurance policy. So it's not there. The line of credit is not there to go buy a house or go on an extra vacation or a fancy car or this or that.
Or invest in crypto.
Or invest in crypto. The line of credit is there for seasonality, working capital, or unexpected emergencies. And so you should think about the line of credit like an insurance policy. I tell the story sometimes when I speak, is if you had a pizza shop on the New Jersey shore, and suddenly out of nowhere, your air conditioner blew out, and it was the heat of season, and you needed 50 grand. It was Friday, you needed 50 grand by Monday to replace your unit. And if you don't have a line, and you call a company like Multifunding and say, I need 50K by Monday, and it's Friday, what is any lender that we reach out to going to spell? The answer is blood and desperation. You never want to be in that situation if you can help it. So if that business had a line sitting there, that checkbook in the drawer for the unexpected emergency, they could then cover that and deal with how to refinance it later. So that's just one example of why a line is so important. I'd like to see lines at the greater of 10% of top line sales or 85% of AR and 50% of inventory if you're in the B2B business.
That's very specific. If you don't have that, and I know there are a lot of businesses that don't, is there a good time or a bad time to get it, or should everybody just be on their way?
You should go get it. You should go get it, and you need to talk to banks in your community or local community banks, and hopefully a bank that you're going to be important to and is ready and willing to get to know your business and talk to them about a line. And hopefully you can get one, and that bank will probably require you to move your deposit relationships over to them, which is okay. And then you can go from there.
Is this the same kind of thing as with a lot of lending, that just because one bank says no doesn't mean you won't be able to find another bank that will say yes?
100%. Sometimes you have to kiss a bunch of frogs to meet a prince.
All right. In the other piece you wrote, you said the primary job of a business owner is to get fired. What did you mean by that?
Sure. So I'm constantly trying to get fired, Loren.
Well, let me know if I can help.
But I'm still here. What I mean by that is that we should always, in my opinion, be trying to take the things we are doing and we're working on where we think we've kind of got them down to a routine, or if there's something we're doing that we can put in the hands of somebody else and we can afford to do that, we should do that to free up space for ourselves to think or to work on other things for the business. So I'm constantly multi-funding will actually turn 13 next week, which is kind of crazy. And over the 13 years, I'm constantly trying to move stuff off of my plate and onto other people. I'm trying to have no work to do.
How's that going?
Good.
Yeah?
Except the cheese keeps moving.
You seem pretty busy to me. You're always flying around the country.
But it's okay that the cheese keeps moving, right? So that means that it gives me time for exploration and to explore new ideas and to do new things and to work on the future of the business. But the business should, the core functioning of the business should not run on me. So when I started, I processed all the loans. I haven't processed a loan in about 5 years, as an example.
This is one of those things that I think everybody understands, makes sense, and is the right way to go. It can just be hard to take that first step.
It's extremely difficult and extremely critical if you're ever going to scale. I remember one of the biggest fear points for me when I would say, well, I can't relinquish handling these files and handling these customers to others because then customers won't like them. Customers like me. I can do this better than anybody else can. Well, in fact, now there's a team doing it who is much better at it than I ever was. And customers don't really want to talk to me anymore. They want to talk to them. And that's great. And now the trick is to take some of the key people on that team and convince them that they got to find people who are better than them at it so they can move on to do other things as well.
Interesting. Ami Kassar is founder and CEO of Multifunding, which helps businesses with their financing needs. Thanks for taking the time, Ami, and thanks for hanging out at 21 Hats.
Always a pleasure, Loren.
Have a great week, everyone.